Fullerton from Aliom Financial, and Al, we've been chatting through the hour, or just the last little while, about some of those top movers on the market, and we mentioned that Eldorado Gold. But in terms of bottom movers today, we've got in the bottom five, or the biggest losers, Orica, which is down by 5%. You've got Extract Resources down by about 3.7%. Brambles 3% weaker, iSoft Group off about 3%, and Aristocrat down by 2.2%. So they're the worst performers across this market today so far. Do you like or dislike any of those stocks, or any reasons that you can see behind?
I mean, no
moves?
standouts. Orica, obviously, on the back of the diversion of Dulux there. Aristocrat, I mean, they're a tough stock, that one. I think there's been some downgrades coming through. I think that their exposure there, they had the large US exposure. They had some exposure in Japan that with the gaming machines that didn't go overly well. I think it's a bit of a mixed bag, and it's a stock that people love to hate. So. I don't see any huge surprises in that bottom five, no.
We also mentioned some of the banks before, and we've talked a little bit about merger and acquisition activity. What about IPOs? Because last week, might have been the week before, Valamis was canned as the IPO. There's been a smaller IPO planned underway, and that's Aurora. That's actually set to list tomorrow. Tell us a bit about Aurora and whether this is a good time for it to be trying to hit the market.
Look, I think the IPO market at this point in time is quite a big risk to be having this in choppy markets, saying that there's certainly it seemed that the take up on Dulux was well and truly there. I think that with Aurora, look, there are some key points there that I like to. I think that it was the market, or the floating price is about $2. I think they have about $600 million under management there. They're really focusing on this niche Australasian and Asian investors, retail, wholesale, institutional. But quite an interesting fact that I read over the weekend, and I'm going to have to read this, but because I want to get these statistics right. But they say that cash on deposit in all the Australian banks currently is at $1.26 trillion. Okay. Now, CBA alone, as we stand, is about $276 billion of cash on deposit from their customer base. Now, the sum of all deposits of all the Aussie banks pre-GFC was less than that CBA figure. Yeah, right. Now, what this shows to me is that there is a huge amount of cash sitting there, keeping the powder dry. And I think that for 2 points, one for Aurora, I think it's a positive that they're actually going out there now when people are actually long deposits. They have cash sitting there, and I think that these bank deposits really show that. The second thing I think is the leverage that the market could get from this when this investor sentiment returns. People do have their cash on deposit, looking for these opportunities, and once that sort of stability does start to flow back in, I think we'll see them start to spend. And
do you think people are more likely to go for a smaller IPO at this stage than that big, huge one of Valamis, or big and huge relative to what else is going on lately?
I think so. I mean, we saw Agbank get away up in Asia, the world's biggest. I mean, that was a monster. Yeah, look, it's nervous times, and let's be honest, it's going to be a nervous few times, over the next 6 months. It's not going to go anywhere. There's going to be mixed data coming through. There's going to be perhaps a few more skeletons in the closet. We've got our reporting season coming up shortly, so people are wary, and they're quite happy to sit on cash and look. And I think it certainly is the way to play. You don't have to be a hero in these markets. You don't have to spend the cash. You look for these opportunities, and that's what we're starting to see. We're starting to see some interest, some overseas interest in some of these companies, cherry picking what they like, looking for these bargains. And so it is the environment to keep powder dry. Yeah.
Can I ask you about something else, maybe which it will be controversial? ASIC will be putting out basically some research and some comments about CFD trading, and of course this comes after the collapse of Sunray a couple of weeks ago, and that's kind of sparked a lot of discussion, of course. What is your view on CFD trading and where it sits in the marketplace? Knowing that over the weekend we spoke with Tony Delosio of ASIC, and he said basically they believe at ASIC that CFD trading is similar to gambling, and people don't understand the risks.
Yeah, look, I think that might be a slightly harsh comment. I think that the onus is on the provider to give the information that's needed in the product disclosure statement, a statement of advice. I think, yes, there is greater transparency needed, that people need to be certainly educated. I think especially when we saw that a lot of people had their self-managed super funds leveraged using some of these derivative products, and I think that really is something which should be reviewed and looked at. So transparency, education of people, yes, that's very important. there is some onus on people at the same time. I mean, if you really want to leverage, you can leverage off stock. You can get a margin loan and have a 95% LVR on some of these top tier banks. So it's not like a CFD is the only way for you to have this leverage play in the market. It can be done using straight equities as well. So CFDs have their place in the market. They're a great tool. People use them for numerous techniques, such as maybe hedging against a long position, or there are numerous strategies that can be used. So there is a place for CFDs, but at the same time, chop shops that sit there and just broke products, high LVRs, omnibus structures where funds are pooled together. Yep. I think it's slowly not having their time or place, and people are starting to realise that.
Al, we're just about to finish up. That's something that we'll watch for this week. We believe that ASIC's actually putting that out today, that research. So we'll look for it. But just as we finish off, some final comments from you about the course of the week, what you think we should be expecting, and your view on the market right now.
Okay, what I think this week. Look, I think the week is going to take direction from obviously the US earnings season. We're going to wait and see what the news flow out there. We have sort of Google, we have Intel, we have a number of companies releasing. This week, JP Morgan's another one there, so that will be the first thing. Let's watch the US there. There's a bit of data, obviously, we spoke about towards the latter half of this week from China, from the US as well, and from the Eurozone. So it's going to be some direction from offshore. Domestically, I think we'll see maybe some lighter volumes there. I think a lot of people, as I said, it's holiday season, so maybe a seasonally quieter time in the markets there. A few nerves out and about, so I think that we're certainly going to see interest in banks. We're going to see interest in the resource sector, as we said, and overall, look, I'm bullish this market. Let's go and get out there.
Good stuff. Great to hear from you, Al. Thanks for joining us in the studio for the hour.
Thank you.
Al Fullerton there from Aliom. Thanks for being with us this hour. Let's just take a break.